Welcome back everyone for another look at the charts on the 4th of November. Today we'll be looking at four instruments, making a start with the EUR/USD, followed by GBPUSD. Then we are to have a look at USDCHF's downward motion. And finally, on the commodities front, we are to examine WTI's price action. And with no time to waste, we move to EUR/USD's 4-hour chart. Euro seems to be confined in a wide sideways motion against the USD, yet today looks like it may have some bearish tendencies, rendering any gains made yesterday. Technically, we tend to maintain a bias for sideways motion of the pair between the 1.1520 support line and the 1.1615 resistance line for now. Please note that the RSI indicator below our 4-hour chart is between the readings of 50 and 30 and has a downward slope, which could imply an advantage for the bears. However, to switch our bias for a sideways movement in favor of a bearish outlook, we would require clear breaking of the 1.1520 support line that was approached on the 12th of October. Lower than that, we also note the 1.1445 level, which has not seen any price action since July 2020, while in an ultimate bearish scenario, we note the 1.1370 level, which served as a resistance and a support line in June and July 2020 respectively. On the flip side, and should the bulls take over, we may see the pair breaking yesterday's high point at the 1.1615 line. Yet for the bulls to clearly state their dominance, we may require also a clear breaking of the 1.1685 resistance level, which will reverse the pair's upward movement on the 29th of October. Should the bulls maintain control after breaking the R2, we set as the next possible target the 1.1780 resistance hurdle that was last tested as a resistance line on the 17th of September. The ECB's dovish stance seems to continue to weigh on the euro, and ECB President Lagarde's statements that the bank is very unlikely to raise rates in 2022 are characteristic. For the USD side of the pair, given that the Fed's interest rate decision is out, we highlight the release of the US employment report for October on Friday tomorrow, the 5th of November, while in the coming week, on Wednesday, the 10th of November, we get the US CPI rates for October. Moving now to cables for our chart, the pound seems to be weakening against the USD for the past week, and yesterday approached the 1.36 support line. The bearish sentiment seems to be renewed today after yesterday's gains, yet the pair's direction could be substantially affected by today's BOE interest rate decision. Should the bank disappoint pound traders and the selling interest be expressed for the pound, we may see cable breaking below the 1.36 support line and aim for the 1.3430 level, which reversed the pair's intense downward movement on the 29th of September. As the lowest level, we note the 1.3290 support barrier that was tested on the 30th of November and the 1st of December. On the other hand, should pound buyers have the initiative over everybody else, we may see cable breaking the 1.3750 resistance line, which was affirmed as a resistance line on the 23rd of September, and aim for the 1.3875 level, which held its ground on the 3rd and 10th of September to the pair's upward pressure. Our highest level noted is the 1.40 resistance level that reversed GBPUSD's upward movement on the 23rd of June. On a more fundamental level, we expect BOE's interest rate decision to be decisive for the pair's direction, given that the Fed's decision is already out. Pound traders, though, could also be interested in the release of UK's GDP rates for Q3 in September next week on November 11th. Moving now to USDCHF's 4-hour chart, USDCHF's price action seems to have stabilized somewhat since the 28th of October as it revolves around the 0.9130 level. We maintain a bearish outlook for the pair as long as it remains below the downward trend line guiding it since the end of September. Please note that the RSI indicator below our 4-hour chart is near the reading of 50, implying a rather indecisive market, while the price action is at the midpoint of the Bollinger Bands, which are converging, possibly reflecting the lower volatility recently. Should the bears actually maintain control, we may see the pair once again breaking below the 0.9130 and taking aim for the 0.9035 level, which provided considerable support for the pair from the 30th of July to the 5th of August. As the lowest level noted in our chart, we have the 0.8930 support line, which provided support for the pair ample of times from the 25th of May to the 11th of June and marks the lowest point for the pair since the 19th of February. Should the pair reverse its direction, breaking the pre-mentioned downward trend line, signaling its exit from the downward movement, it could take aim initially for the 0.9215 resistance line that capped the pair's upward movement on the 26th of October. Should R1 be broken, we note the 0.93 level that resisted the upward pressure for the pair's price action on the 6th and 8th of October. As the highest level noted in our chart, we have the 0.9370 level that was approached for the last time on the 30th of September. Despite the Swiss currency strengthening, we still see that there is still room before the SNB reacts, so that issue should not deflect traders' attention. On the other hand, the acceleration of the Swiss inflation rates for October, released recently, may also have contributed to the strengthening of the CHF. Also, safe haven flows could possibly lead the pair's price action to either direction. Finally, on the commodities front, WTI is for our chart. WTI's price action has been moving lower since it broke the upward trend line guiding it. Yet today the downward motion bounced on the 79 support line. The commodities prices could move even lower technically, yet if today's upward motion is extended, it could threaten the creation of a downward trend line. It's characteristic that the RSI indicator below our 4-hour chart is also bounced at the level of 30, despite still being below the reading of 50, has now a slight upward inclination. On the other hand, WTI's prices could be only correcting higher before the next dive lower. Should the selling interest of the market be actually renewed, we may see WTI's price action initially breaking the 79 support line that supported its prices during today's Asian session and take aim for the 76.4 support level that acted as a resistance and a support line on the 28th of September and the 7th of October respectively. Lower than that, we also note the 73.30 level that reversed the commodities downward price action on the 30th of September. To the upside, and should the WTI find fresh buying orders along its path, we may see it breaking the 82 resistance line and take aim of the 85 resistance level that was approached on the 25th of October. Please note that the 85 level marks a multi-year high for WTI prices, and higher than that, we note the 88 resistance level as a possible target. Fundamentally, expectations for higher demand and light supply of the commodity are still present among oil traders and should be kept under a close watch. On the other hand, the ballooning of the US oil reserves, as reported by AP and EIA, could be keeping the lid on the commodities prices. That should sum it up from all of us here at IronFX. Best wishes for solid trading.